Dr. Idia Desmia show, a show where I help SMEs thrive. And on this platform, I share resources. Of course, it's educative and informative resources only. And always advising everybody to seek professional advice. And I always bring people here, not always, but most of the time, or sometimes I would say, people actually either send questions or appear on the show. They can appear on the show to provide resourceful information or just to come on the show to ask questions or also send questions. And so I have another interesting topic. But before I do that, I just want to say thank you so much to everyone that has watched, you know, commented, complimented, and I really appreciate that. So again, I'm happy to be here today. It's been almost, I believe, almost an amazing. I mean, it's been an amazing year. We're almost at the 1 year mark, and it's been very interesting. And I know, I hopefully, I believe so that a lot of people have benefited from this program. So today I have another interesting topic. The topic today is the importance of tax planning. The importance of tax planning. You know, it's almost we're running up, it's almost the end of the year. We're actually in the third quarter of the year. Wherever you're located, whether you're, in any country, right, you have a business, um, as long as that country, you're paying taxes in that country, it's very important for you to do tax planning, right? Now, a lot of people might say that they don't have um, a calendar year, year end. When I say calendar year end, I'm talking about people that their year end maybe is a fiscal year, maybe in the middle of the year, they end in June, they end in middle of the year, or any month, maybe in September, it depends. But a lot of people, and have their businesses, the calendar that their business year to coincide with the calendar year. So I'm just really looking at those business. But if you don't coincide with the calendar year, it's very important for you still to do tax planning. I'm just saying that because I'm looking at this is the third quarter, the last, or the fourth quarter, the last quarter of the year. So your quarter might be different, your last quarter might be different, but it's so important for you to really do tax planning. It's good. Tax planning is very important. So that's why I decided to speak on this at this point in time, right? So tax planning, what is tax planning? Tax planning is just looking at ways so that you can have a better tax position, right? I always tell people, yeah, paying tax is not bad, but you don't want to pay all your profits, so you want to make sure you don't want to put all your profits as a tax a tax payment. You want to make sure that all your profit doesn't go to taxes, right? You don't want that to happen. It doesn't go to taxes, or they don't go to taxes, right? So I wanted to make sure we know that. So I want to, just talk about the importance. But before I do that, I want to make sure we understand that when we're talking about tax planning, we have to look at tax evasion and tax avoidance, right? Tax evasion is criminal, right? Is circumventing the tax law, doing something that is criminal, maybe committing, maybe lying about your income, or not recognizing, of course, we talked about income, or just doing something that is really illegal for you to actually get a lower tax bill. We're not talking about that, and I do not encourage that. And I will say a no to that. So we're not talking about tax evasion here. Tax planning does not equate to tax evasion. Tax planning so tax planning is aligned with tax avoidance, looking for ways to actually pay less taxes, right? Okay, so making sure you understand that. We want to make sure we're not saying that, oh, this is a platform to commit tax evasion. No way. That's not what we're doing here. All right. So let's talk about the different types of tax planning. Now, there usually, again, there might be categories that you already know. I always say this because many people can have different categories, and so this is based on experience and based on what my knowledge base, right? So or my knowledge. So there is different kinds of tax planning. There a kind of tax planning that is like you're it's like there's purposeful, like you are actually looking for avenues where you can actually reduce your tax liability. They're actually making an effort to find out, okay, what am I supposed to do? And this can be done any time of the year. There's nothing wrong with that, right? And then there are there are actually short-term tax planning, and there is long-term. Now, short-term is usually done at the end of the year. Now, I have a couple of retainer clients where, I work with them throughout the year, but in addition to that, during this quarter, I sit with them and ask them questions, right? Because I always say, please be transparent to your with your, be transparent, right? With your CPA. Make sure you tell them things, because you might think, no, it's not a big deal, but something might apply, right? Something might apply which can be beneficial to you, to your company, right? So I do that, because I don't, it's not at maybe when the tax returns are due in March or April, and that that you start seeing clients will say, oh, I had this, but I said, why didn't you tell me last year? So because of that, I always, have a conversation with my clients and have meetings, set up meetings so that I can discuss with them freely and find out what's happening in their lives so that I can advise their business well. All right. And sometimes the business flows through, if it's depending on the kind of entity it is, right? So again, that could be short, that is during this time, and maybe there's information that I didn't know at the beginning of the year, and so, oh my goodness, okay, that's a good thing. I'm very happy. Thank God, I'm very grateful that I know right now. So what I do at this time is that I start, start doing some analysis on what is the best position for my client. Okay. Now, if you look at long-term tax planning, a lot of times, tax planning can be done. As I said, I have clients that I have retainer agreements with, and I work with them throughout the year. So there are a couple of things that come up, and we look at it at the beginning of the year. Usually this happens at the beginning of the year. But again, I do both, right? For my client, all my clients that have retainer agreements with me, I start with the beginning of the year, at the beginning of the year, work with them. Then towards the November, October time, I sit with them and go through and ask questions, and generally about things that pertain to anything, right? Have they bought? Are they thinking of buying equipment? Is there something that they're looking at? Is there an expansion? Are you looking at their cash flow? What is happening? So I look at the implication. The great thing about being a Destiny CPA firm is that we don't just look at one side of the coin, right? When I say one, we look at everything, not just both sides of the coin. Or I should say, we look at the big picture, right? Everything that pertains to the business, right? The big picture, not just, oh, want to see, are you making profit? Let's see what you're not doing. No, we look at from the beginning how the profit affects the tax, and how you can actually make sure that the tax implication is not too high on the business part of it. So we look at the big picture. And how do we look at the big picture? By asking questions, by speaking to our clients to make sure that they are really really transparent. Will I say transparent? Transparent, yes, but sometimes clients don't even know that they should tell you these things. Not that they're hiding anything from me or from their CPA, but they don't even know the importance of this information that they have. So trying to make sure that we discuss, trying to always let my clients know that they should let me know when anything happens, anything changes. They should actually let me know in the business, what can we do to make sure that at the end of the year, they come out in a better position. All right. So We talked about tax avoidance, we talked about tax evasion, and then of course the types of tax planning. And of course the way I mean, again, it's not exhaustive. All right, the types of tax planning, there might be other ways, but these are the ones that I'm just stating here during this show. Now, why do you think you would be interested in tax planning? Why is this so important for businesses to do tax planning? I know I've already said the first point, right? And and I'm going to give you, I believe I have about 8. But the very first point, right, is that of course you want to decrease your tax liability. You don't want to pay too much in taxes, right? That's really the very first thing. It's so wonderful to do well in your business, very well. SMEs do very well. Example, you do very well. And yes, anyone that's listening should do well. So thumbs up to you. But at the end of the day, you don't want to pay all your profits to to the tax authority, because I mean, you just said, okay, tax it's time to pay taxes. So the very first reason, right? The very first reason, right, is that you want to pay lower taxes, right? Of course, I'm sure everybody is happy about that. So that's why that is very important to plan, do your tax planning. You want to pay lower taxes, lower tax liability. The second point is sunset provisions. Now, I know that if you're not in the tax arena, accounting arena, CPA tax arena, you will not really, you might not, let me tell you, you might not understand what is a sunset provision. A sunset provision are provisions, or sunset provisions as provisions that eventually fade away, go away. Think of it, sunset. I always tell people, I think many people think that that why would I say that? But I mean, I just feel that I love what I do, because I mean, sunset, it makes sense for a sunset provision to go away because the sun is setting. You know what I mean? So for me, that's what I love about my profession, right? So the sunset provision means that this provision will go away, will set, right? So usually sunset provisions are provisions that are available for a period of time, and then it will go away, right? There are a couple, I'm not going to, write or tell you, I mean, there are a couple, there are many, not a couple, there are many, but I'm not going to go through the list. But I just want to let you know that the importance of knowing them, you're making sure you take advantage of these provisions before they fade away, is something that you should consider, because at the end of the day, it's also linked to getting a good tax position, right? If you don't know if you don't, first of all, you have to know the sunset provisions, and then you have to take advantage of those provisions, right? Now, I've said this before, and I will say it again. It's so important. It's good to work with a professional. If you don't have a CPA you're working with, you can call our firm and come over, and that will work with you. But it's so important for you to have a professional that knows that these provisions exist, and will actually make sure that their clients benefits from these provisions. Okay. All right. Another great reason, the third reason is, think of it. If you are not paying, if you're supposed to pay $20,000, no, $80,000 in taxes, and you eventually pay 20, would that not mean an increase in cash flow, $60,000 in your pocket? So that's another advantage of tax planning, right? Even though you're looking at reduced tax liability, right? You have more money. A lot of things that SMEs struggle with, a lot of things, SMEs struggle with a lot of things, right? One of the huge issues is having capital, right? So imagine that cash flow, because you're able to, plan your taxes, right? You have good cash flow, right? Cash flow, right? Coming out of the difference, right? Because your bank account now is not paying 80, it's paying 20, and you have a net of 60. All right. So That is the third point. All right. The next point is the, let's see, the compliance. The fourth point is compliance. Why do I say compliance? When you know, tax planning involves knowing the changes in tax laws. And a lot of times, if you don't know the changes, you can actually have issues with compliance. Why do I say that? That's a big issue. We know that ignorance of the law is no excuse, right? I'm not an attorney, right? But I had my master's is actually in tax law, but I'm not an attorney. But I want to tell you an example how I can show you that ignorance of the law is not no excuse. There was a client I was working with. Somebody sent this client to me. The person had a lot of issues with their revenue officer. Revenue officer is is a staff of the Internal Revenue Service that actually deals directly with the taxpayer. And so at the time that this client came to me, the client had um, issues with the revenue officer, issues because the client had a lot of outstanding taxes. And so when this happened, I mean, person that came to me at that time to step in, and the person was the client. This new client told me that, the person that they used before me did not really know the job, did not understand the tax law, did not understand the provisions, and that because of that, that's why he's in this predicament. So I had to step in, and I remember my discussion with the revenue officer, trying to explain, and what I really appreciated at that time. I think I've mentioned this before, but if I haven't, this is the first time you're watching my program. Um, um, so um, okay, hear it out. So let me say that what happened. So she was very nice, listening to me, answering my questions, and saying, this is what happened to um, this um, taxpayer that we're working on it. That please, I need some more time. I just got the file. I want to get this thing done. And she was so nice to listen. But you know what she said at the end of it? After listening to me, said, "Oh, is that your excuse? Because he got someone that did not understand the tax law or the tax provisions. Oh, I'm sorry, we can't give you more time because that is not an excuse. That person did not understand the law. It's not an excuse at this time. So, well, maybe it could have been later. I don't know, but she said not an excuse. I think I added at this time. So, you want to make sure that you're not going to be at the wrong end of the situation, right? You want to make sure that when you're talking about um, the risk, you're not going to have an issue because it's not going to be a problem since you are working with a professional that knows the law, and compliance is a big issue. You know that the IRS, and I'm sure, I believe this happens even around the globe, there are penalties and interest. And so we're not even talking about the tax alone, but what about the penalty and interest that follows? So that's very important. There is compliance, right? The risk involved is non-existent, right? There's compliance. Okay. I believe the fourth point. Okay. So the next point I would like to share, which is the fifth point, is increase in profitability, right? Now, cash taxes, right? Usually taxes are deducted, right? Now, if you deduct your tax, right? Usually not, it depends on your structure, and we could go into that, but I don't want to stretch it so much. So if you deduct your taxes, your profit will go down, right? If you have, the more taxes you have, the you won't have the lower your profit, right? So it just, of course, it depends on your structure, because some of the taxes are not deductible. You know that, but it depends on your structure, right? When I say structure, I mean business structure. And you could actually go and listen to one of my courses on business structure. So just wanted to let you know, if you don't understand what I'm saying, are you a corporation? Are you an LLC? What are you? So that also factors in. All right. All right. Awesome. So the next point I would like to share is the issue of, having flexibility. Why do I say that? Now, in tax, there are a lot of gray areas. There are a lot of gray areas, right? And so you can go either with can take this position or that position. But when we look at flexibility, let me break it down a little bit for you. Now, if somebody, for example, an SME, the owner of an SME wants to buy property, let's say buy property. One of the things they look at the bank maybe wants to finance this. The SME has to show the financials. Usually they base it on the tax return. Now, we're looking at flexibility now. Now, if the person wants to buy a property, of course, the the goal would be to have an increase in profits, right? Because we're talking about flexibility now, we're not talking about profit increase now, but I'm sort of tying it. We're talking about an flexibility where the person will say, you know what, this time I want to show good profit, because I want the finance company or the bank to say, you know what, this person can repay the loan. In that case, there are some provisions you would not take at that time, right? You will not be in an aggressive position to deduct to deduct a lot of expenses, because you want to show a strong income, right? Good income. So tax planning gives you that flexibility, right? And that's why I tell my fellow CPAs, ask the client their objective. That's why, what are your plans? So when a client sits in front of me and says, oh yeah, I'm planning to buy some properties, some properties here, some properties there, it's like a light switch goes on, because in that case, that's okay. That means the person wants to show a strong income statement, right? And that's why I always do my best to meet my clients at the end. This quarter is a busy quarter for me, because I really ask questions. Then we look at that flexibility, right? The flexibility, and say, okay, what is it that we want to do? What are kind of the provisions do we want to, look at, right? And that's why I said there are gray areas. Yes, there are gray areas that we have to look at when it comes to the client's objective. And that's why it's good to do tax planning. All right. And then, I talked about compliance. And also there are issues of risk involved, right? What are you, are you avoiding something, right? When I say risk involved, let me cite an example, right? There are sometimes people have property in a trust, right? Right. So if 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 that is a better position for that property, right? That's where tax planning comes up. Maybe there's a reason why you're, after listening to my client, I might say, okay, that going with a trust is better. The tax provisions for a trust is better, right? So because of the risk, having it stand alone, there are bigger issues, right? Because maybe the person comes from a family that they are always having issues here and there within the family. Maybe because that's why I said listening is part of tax planning. It's part of tax planning. All right. So all this is like, okay, put the property in a trust so that property will be protected. All right. So just, there's so many, right? There's so many so many. I believe that I gave this the is that the seventh? Let me see. I think okay. I think there's one more. The goal of tax planning, of course, as I said, is to reduce your tax liability, understand your position, look at the credits, looking for ways in which that this position benefit you, right? So it just depends on your objective, right? And another thing that tax planning does is that it also actually helps you look at your position at a point in time regarding future decisions, not only present decisions. I know that's the goal. I said long term and short term, explain that to you. But even generally, right, under the importance, right, even because there are some short term decisions that would not work for long term. So the last point is, yes, you're looking at short term and long term and actually how to bring them together to benefit your company. All right. Yes, you might talk about, oh, but that property, why did I talk about property? Businesses own property. Businesses own property, and businesses put their property in trust. Right? So remember, what I'm saying here is for general information only. It's not just, it's broad. But what I want you to get out of this is that please make tax planning a priority. Don't wait till April. Here is April 15th, where those that have sole proprietorships, right? SMEs that sole proprietorships are due. Those that have partnerships, we have it due in March, an S corp due in March, right? So it's very important for you to make sure that you're aligned with your tax partner, your lawyer, your attorney, your CPA, aligned. When I say aligned, sitting down and speaking with them, right, is very important. And of course, if you do not have a CPA, we're always here to help you, all right, to navigate this. But it's so important. People wait for the last minute. And I mean, I've seen cases that people end up paying hundreds, almost close to $100,000. I mean, which could have been avoided, because of inadequate tax planning, and I always say, right, make sure you work with someone that is that looks at the big picture, right? We're not looking at, okay, yes, profit, but the profit, you want to look at someone profit, yes, but how does that profit align with the tax that is due, right? There are so many provisions out there that are very beneficial to SMEs, very many. Are you getting that? Are you taking advantage of that? There are so many provisions out there. For example, even in buying an asset, I have a client. Remember, I said I have retainer clients. My client wanted to buy a vehicle, and my client called me and said, "Oh, what type of vehicle?" Because she heard me talking about the electric vehicles that have credits. Also, in addition to that, what about the weight of the vehicle? All right. So there are things there, that are out there, but it's so important for you to work again with your accountant, your CPA, before the close of the year, before the close of your business year. And again, if you do not have a CPA, right, please reach out to us, and we're happy to help. All right. And of course, I'm going to usually give the contact information as by the end of the program. All right. Okay. So hopefully you be you really take this upon yourself as a business owner, as an SME, business owner of a small and medium-sized enterprise, to really take that up and really sit back and say, okay, how do I plan? Making sure that your tax liability, making sure your objectives are met, making sure that you're taking advantage of all those provisions out there, increasing your cash flow, being able to reinvest that cash, that increase in cash flow into something else that makes money, it's such a whole bunch, right? Bunch of good stuff. So make sure. And now also, as I already stated, this is not tax evasion. Please do not think of tax evasion. Please make sure, right, that is tax avoidance, which is awesome, legal, some good stuff there. All right. So let's go to the questions for today. Okay. My company is a new entity. Do I need to do do I need to engage in tax planning? Of course. I mean, this is actually an inspiration for this this show today. So what I mean, when you say company is new, and you said what we are saying, I mean, you're saying that I believe you're saying that because it's new, you should engage in tax planning. Say that's no, don't say because it's new. Tax planning is so important. I mean, it's better to be safe than sorry. It could be you go there and meet your CPA. You come and meet with us, and we find out that okay, you're doing the right thing. Just do just make sure we take advantage of these provisions, and let's make sure we run with it. Because that's why I always say that at the end of the day, it depends on your business, right? Right? It depends on specific to your business. And this is just for educational purposes. So I would say yes, you need to engage in tax planning. You need to engage in tax planning. I mean, remember the example I gave you, right? Now imagine $80,000 in tax. You're paying 20, right? Wow, amazing, right? You want to make sure you're taking advantage of something like that. All right. And so, I mean, it could be yours might not be. I mean, it could be anything. It could be anything, right? So make sure you're taking advantage of that. The next question is, I understand that it's very advantageous to purchase assets for my business before the end of the year. Is that correct? Well, I'm not going to give a general answer, but I can understand where you're coming from. Well, I won't say, let me say this the other way around. I'm not going to give a specific answer, okay? I'm going to give something general, a general answer. So I'm correcting myself there. So specifically, I wouldn't say yes or no, right? But generally, what a lot of people do is that instead of having money just being kept in the bank, they might have some assets that they need, right? They have some assets. Maybe they need a new, maybe new furniture. They might need a new vehicle, right? Anything for the company. And they say, you know what? I want to take advantage and buy these vehicles because there's depreciation on these vehicles. There's depreciation that I can take advantage of. This Section 179. There are so many provisions out there. And so, again, it just depends. I guess that's where this question is coming from. The idea of, okay, yes, instead of keeping money in the bank, that's what I want to do. But again, this is just a general answer. Your case might be different. So don't just step out and say, okay, I'm going to buy assets here and there. Really sit with your tax practitioner, your CPA, and just say, okay, let them see if is it necessary, right? Because if you want to just spend a whole bunch of money on these assets, but you don't have cash flow, you don't have enough to continue your business the next year, your cash flow is tight. Is that really advantageous, right? And that's why I always say that we look at the big picture. So that's why I'm giving you this general answer, but really it might not be the case with you. You look at the big picture to really see, right, if that's really what you should do, right? Yes, right. So again, advantageous because of the depreciation, right? Because depreciation is deductible. And so somebody might say, okay, yeah, I want to reduce my taxes, but of course, what are your objective, right? Is you want to buy and get that depreciation, but yet you have no money in the bank to continue doing what you're supposed to do. All right. So you don't, it just depends, right? When I say continue doing what you're supposed to do, your business is not flourishing. You're just, you're not, you made some money, right? Your goal is to continue making good money, not get so excited for a month or so. You need to make good money. So it could be so many factors that will come into this question. Yeah, that's why I said the answer is not specific. This is the general answer. All right. Okay, the next question. Okay, I'm losing my customers to my competitor. What do I do? Okay, well, I mean, it's not stated here what kind of business, right? But let's just say, let me see, um, let me see, how do I relate this? Maybe I should say, let me see, what example will I give that? Okay, let's say a bakery. I'm talking about bakery now because, this is the holiday season and we know, and I like talking about all those good stuff, good, tasteful, but, we still have to watch how much we eat that. But okay, so, um, so you ask yourself why? Why is why are you really losing customers to your competitor? Is it because you had a good standard with your baking and all of a sudden you're not actually producing how you're supposed to produce? When I say produce, I'm not talking about quantity, I'm talking about quality, right? Is it that your prices have gone up? I know that, and I will not say that you should not increase your pricing. I have a show on that, how to, increase your pricing. So I will not say, no, 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 don't increase your pricing. But there are several factors, right? So I would say, first of all, sit back and say, has anything changed? That's number one. Has anything changed? Now, if nothing has changed, that okay, the quality of your snacks are awesome, your bakery, your baking, your cakes and everything are still good. Your the quality of your your packaging is still fine. Everything is good, right? Then you have to sit back and say, okay, what can you do to step it up a notch, just a little bit? What can you do, right? Maybe you could have something different when it comes to delivery. You could add a different flavor. You can get it out there on social media and get some people to enjoy it, come and get some free cakes or something like that. Get people to try, or you just talk about a new flavor. There's something new, right? What are you doing to capture people's attention, right? I know that one of the things that is great is marketing and branding, but I really want to step back and I hope you can actually watch the program, the program that talked about organic marketing. I like talking about that way of marketing because I know for SMEs, your resources are very limited. So I know your resources are very limited. So I always like starting with organic marketing. Of course, it can grow even more. That's fine. But if you don't have so much money, you don't have so much money for marketing, you can start with organic marketing. Then, before you go into those ads, but get yourself out on social media. Let people really get to know what you're doing. Let people get to know there's maybe a new product, getting some excitement out there. And then also find out what your competitor is doing. I'm not talking about sparring. No, I'm just saying that find out why. Maybe you can look at their reviews and say, okay, what's happening? What are they doing that is different, right? And see if you can say, okay, maybe your customer service is very bad. It could be because you might be very nice, right? But what about those working with you, all right? Or working for you? What about maybe you think of packages, think of um, maybe giving discounts or giving points. I know a lot of people, a lot of small SMEs. Just using the bakery as an example, right? Many people even do that. When you go and do your nails, they'll give you points so that you come, you get something free. Or you give points, do look for ways to just increase client engagement, customer engagement, right? Get there on social media, just try and get your um, get yourself more out there, more, right? You could even sponsor an event, say, oh, find out something in the local community, right? What can you sponsor, right? I mean, you might say, but that's a cost, but I guarantee you, if you sponsor an event, right? If you sponsor an event, right? People would actually come out. Most time, most times when I say guarantee, okay, let me not say 100%, but at least 90% of the time. So that guarantees, let me say 90% of the time. Many people come out and say, okay, this was awesome. And you can give people coupons. I know that some restaurants or some even fast food places say, oh, come in, buy this sandwich and we'll give you the other one for free, right? Right. So have a way, of actually marketing your product, right? And see, maybe there's something that you're not noticing, right? Again, I mentioned customer service, right? I know there's a fast food restaurant that if you go there, I mean, you're like, you're just like, they make you like you're part of the family. I mean, they're very happy to be serving you, and they're very, I mean, who would like to go to a place like that? So it depends. So it could be so many factors. So I would say that sit back and go through everything that you're doing and say, okay, there's something different. Then find out about the reviews of the competitor and say, okay, maybe let me look at the reviews and look at your reviews. Maybe there's something that is wrong somewhere, and you respond in a very beautiful way. All right. Awesome. Okay. So yes, so it's there's a market share for so many people out there. So even though you're losing your customers to this competitor, you can get more other customers. I mean, everybody, this is the time that baking is I mean, people, there's always room for baking. So for cakes, for things like that, celebrations all the time. So don't worry about it. Just look inwards to see what you can do different. Something that what is it that you can do better, or maybe look at what it's you can improve on. All right. And I'm just using the bakery as an example. I mean, it depends on the business you're in. Just wanted to make sure you. I mean, I just had to relate it to a business so that I can give practical examples, practical points, right, on that. Okay. The next point is it better to use a CP or a bookkeeper for my accounting? All right. This comes straight home, right? CPA or a bookkeeper. Now, bookkeepers, really, well, there are some CPAs, like in my firm, we talk about accounting. We don't just post entries, we make sense out of it, right? And that's what accounting does, and that's what a CPA does, right? Now, I mean, I feel that this is from my, understanding. Bookkeepers, they post entries, right? They post, entry, they understand the debit, credit, they understand those good stuff, which is not bad. But the accountants actually makes sense, finds out, okay, this is not supposed to be here, does an analysis, goes further. Why is this here? Why is not this? Why is that not here? Why is that not there? Okay, so in that case, I would say what I would, of course, my answer. A CPA is better. Now, there are CPAs that incorporate keeping in their firm, that's fine. But a CPA has so much training, right, that can really, should I say, apart from taking your business to another level, the training gives a CPA more understanding. It gives you, if you use a CPA, it actually gives you should I say, I won't say information only, but it benefits you more because of what the CPA brings to the table. That's the way to put it, right? So much more. So the answer I would say is better to use a CPA. And of course, if you don't have a CPA that you're working with, please, you know what? Make sure you actually reach out to us, right? Now, this is the website there. I hope I'm okay. Yeah. So you see that drinia.com, driniadesino.com is there. So I'm hoping you can see everything. Okay. So, go to the website. You want to appear on this program, go ahead and, find out ways to do that. If you want to actually contact the CPA firm, our CPA firm, there's a way to do that also. It was really nice being here. I know you could have done something else today. This is it's the time that you spend with us is very appreciated. We are very appreciative. I am very appreciative, and hopefully I'll see you next time. Thank you for being here, and see you next time. And of course, I always say this: for you to thrive as an SME, you need to be intentional.